Are going live. Good morning, good morning, good morning, good morning, good morning, everybody.
Wow.
Let people roll in here. We're getting started with our weekly show, MMT Investment Show, Unconventional Wisdom. Thank you for being here. Today with me is Joe, Randy, Mark, Tim, and Deshaun, who does not have a camera, but he is present with us. How's it going, Deshaun?
Lovely. How is everyone?
Oh, doing well, doing well. Welcome in. Everybody's joining up properly. Good, good. Just to let everyone know, you can type anything you'd like. Well, not anything. Keep it reasonable. Into the comment box on Facebook or LinkedIn. We'll be able to see that, put it up, answer any questions you have throughout the show. Don't worry about timing. We can decide when to pop them up. So, but yeah, really glad everyone is here today. Joe, how was the MMT week before we dive into our topic here?
Well, let me tell you, we've had one heck of a good week through today, and I'm two transactions I haven't recorded yet that Tim just sent. We're up 158.1570% through so far today. We've had two more trades that, so it's going to be about 160%, which is huge. So tomorrow we could easily go over 200%, which I believe would be about the largest week we've had. And we've a lot of transactions. We've been having 17, 18 transactions. Today was really a slow day. We've only had about 8 today. But they were all good, all profitable. Wow. And the guys are just doing a fantastic job. So
perfect.
Yep.
And to clarify, that's between the 3 traders on the bottom. Joe?
I'm sorry.
It was everyone online today?
Yes.
Okay, just to clarify the return so they didn't think one person was
yeah. No, that's Mark there and Tim and Deshaun and the 3 of them, and I'm sort of moderating it. Yep.
Perfect. Yeah, really awesome chat room they got going on there. Well, it's hardly a chat room. It's a morning webinar that they have every morning for the first hour.
The people can they have the charts up there because this whole thing is chart based, and they're teaching the people that subscribe to that exactly and precisely how to read that chart and when to enter and when to exit position. It's really simple stuff, and the folks actually do it. These are real trades they're doing. We've been doing it as a subscription service for about 100 weeks now, averaging over 99% a week. We've been doing it year-wise, almost 5 years, and trading our own account. These guys trade our account plus their own. So these are real trades. When they say they're prepping a trade, they tell you what they're getting ready to do. So I'm entering this, I'm entering it right now based on the chart, and they tell you what the chart is saying. So you learn this. You don't have to be dependent on it for the rest of your life. You're going to learn how to do it based on that. And then they say, we're getting out of it now. And here's the return. So.
Yeah, one of our favorite things is graduates, people we can see off and have a chance to see them a year later and see how they're doing and
absolutely
say hi. Yeah, that's fantastic.
And those folks report their earnings also. So we read they come in by message and we say, okay, Jim just made blah 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 whatever. So
that's awesome. If anybody is, go ahead, Tim.
No, I was going to say it's a lot of fun.
Yeah, you guys have a good time in the morning. Whenever we're putting those videos together, you guys are always chatting.
We have a lot of fun with the clients. I mean, they write messages about what they're doing, but we always have something nasty to say, about it.
Yeah. Are you guys doing Friendly Phone Friday still?
Yeah, we still do the Friendly Phone Friday. On a Friday, we open our phone line after 9 a.m. because they're busy doing trades before then, and 9 a.m. Central Time, and people can call in on the platform, and we unlock their little ringer, and we can talk. So
that's awesome. If anybody's wondering what those trades look like, those trades usually last for about under a minute usually.
16 to 25 or 30 seconds, but certainly under a minute. Yep.
Yeah, so very, very quick. If anybody's curious what that looks like, we just started. Oh, sorry, my dog is scratching his collar. If anybody's wondering what those trades look like, TikTok has been a really cool platform because they're 1 minute or less videos. So take a look on there. I think we're up to about almost 20 videos are up about individual trade examples. I think there's a trade in each one where we haven't really gotten into the lessons yet, and things like that. I'm just trying to get a base. So.
That's really cool that you came up with that, because they could see the chart and you could hear like whoever's doing the trade, talking and making the trade. You can see why it's such a good learning tool, and because you're not trying to memorize something, you're just seeing it for real, and it's really really neat. And also on our website, you've got a free 2 weeks to that service when you go to this free 2 weeks on it. So
absolutely, micromomenttrading.com.
Yeah.
So, awesome. So our I'm going to introduce the topic and then keep going. Today we are going to be looking at charting indicators. I'm really excited about this week because obviously charting indicators is a confusing topic. You kind of enter the world of trading, and some of the terminology, some of those things, even in the introduction, is a bit much, But speaking to any new traders who walk in, and why do they have to call it large market capitalization? It means it's a big company, right? Large market capitalization, big company. That's it. So we try to simplify those things. So I think today about the charting indicators will be very relevant, and then obviously very closely connected to what we do. So, yeah, Randy, how was the week with momentum trading, covered calls, coaching? How's it going?
Really good, actually. And as Micah mentioned, I actually teach covered call investing and also momentum trading. Momentum trading is a weekly webinar on Monday mornings, live in the market, and covered call investing is Wednesday morning with a live in the market webinar every week. And during those webinars, I not only teach the process, and the goal is, as Micah mentioned, is you actually learn the process. Or I think maybe Joe talked about that. You learn the process so you can do it for the rest of your life. I provide the coaching, and during that coaching, we actually search for and find positions that I enter, and then I send out an alert that says, "Hey, this is what I'm doing," so that everybody can follow along in their virtual trading account as they're learning. After you learn, then you're seeing more and more training as it goes. So this week on Monday during the momentum trading webinar, which is where we use the proprietary advanced charting program, and I know we're going to be talking about technical indicators today, that the advanced charting program puts together, oh, hey Keith, puts together about 20 technical indicators all into one easy to learn and then understand how to use chart that lets it identify the beginning of momentum in a stock and in a little bit longer term period. So we actually entered Apple this Monday morning, and Apple, it's even doing better now. I actually exited my position in 3 hours. So I entered a call on Apple. It went up, and I decided after 3 hours that I'd lock in my profits for a 2.8% return for 3 hours. Subsequently, Apple's been even going up more. I think that particular position is probably up about 40 or 50% right now. I haven't looked recently, which I could look here real quick. But Apple's kind of on a tear right now, and I mean, of course, which one of you trades Apple every day? Is it you, Tim?
Yeah, Tim.
Yeah. Well, Tim
Tim
knows very well what Apple's been doing because he watches it moment by moment by moment. I just look at it. I just look at it occasionally. But let me see what the June. I had the June 118.75 call, and it is now. Oh, excuse me. It was the June 2022 June call.
Ways out.
The 118.75, and that is now trading at $22.80. When I entered, it was 19.65. So that's up over $3.
Wow.
I took a profit of 55 cents on Monday afternoon. But that's the power of the advanced charting and all the technical indicators that are in there that indicated that Apple was at the beginning of an increasing, a rising momentum cycle on Monday. So we entered that position. Some people will still be in it because they just try to follow it for as long as the chart keeps going up. I just like to take a profit.
When you said
And
you made 55 cents, let folks know you didn't pay the full price for that. You paid.
oh no, it was only $19.65 per share for the investment, and then it went up 55 cents per share on that call, and that ended up being a 2.8% return for just 3 hours. I could have left it in and left it overnight. I just like to take a little bit shorter term profits right now with the market's kind of crazy. You never know exactly which direction it's going to go in the longer term. So I locked in my profit. But again, the advanced chart says it was in good, strong rising momentum, and it's still going. I think
So,
Apple's up to almost 130 again today, isn't it?
yeah, it's at 129.15, and it's had about a $6 rise this week alone,
Yeah.
which is really a breakout for Apple.
What has been going on with it, Tim? Is there any cause for this recent push?
Yeah, I think it's just part of the optimism that's out there on tech. Apple was getting beat up for a while, just kind of slowly pushing down, but there's been renewed interest in the tech sector, and all boats rise on a rising tide. So I think it picked up on some of that. No particular news really, other than the normal rumors that are coming out of Apple. As we know, Apple's very tight-lipped about what's going on, so it's so speculative. But I think what's going on is it's just finishing a period of sell-off for the last month or maybe two, and it's in a period of rising value now, as our charts, as Randy was just saying, as our charts clearly indicate. So that's a great call, great profit.
Awesome. Sounds
Now,
good.
in addition to teaching the momentum trading on Mondays, then I also teach covered call in investing. And on Wednesdays, I spend 2 hours every week teaching a synthetic covered call process. And for those that don't know what a covered call is, a covered call is you buy the stock, or you can buy a long call and then sell a option against that. So you're selling the right for someone else to buy the stock back from you at more than you paid for it, or at least a positive called return. So take Apple, that's trading at almost 129 right now. Instead of buying it, you could buy the stock of Apple, pay 129, and sell the 129 call and get a couple dollars of profit. If it stays above 129, you get called out, you get your $129 back, and you keep the $2 per share profit. That's what a covered call is. Now, we teach in the money covered calls, which means that we sell the call that's in the money, like a 125 call when we bought the stock at 129, but we'd get $8 per share of capital returned at the time we sold the call. So even though we paid 129 for the call and sold the 125 call, we end up with $132 when it gets called out. But it increases the probability that we get called out. And to me, especially now with the way the market is, the most important thing is I want to get back to cash by the end of the week, because you never know what's going to happen over the weekend. You don't even know what's going to happen from day to day. And that's why, like Tim and Mark's and Deshaun, they trade in and out in a minute, and they're at cash at the end of every day. So they don't care what happens overnight. With the covered call, I'm in the positions more like 3 or 4 days. And at the end of the week, the goal is to be called out, get all the capital back, and lock in those returns. So for last Friday, all 5 of the positions that I entered last week were closed out, got all the capital back, and the returns were between 11.1% return for the week on Square, up to 31.5% return on Qualcomm for the week. In fact, that was only for 3 days.
Jeez.
and then all of that was back to cash and then reentry. I've got 5 more positions on for this week. All of them are in the money today. It's always knock on wood. Me playing baseball, I've been playing baseball about all my life. One of the things that you never do, and some people break the rule, but like when a pitcher is throwing a no hitter, you don't go up to him and say, "Hey, you're doing a great job. You know you have a no hitter," because the very next thing that happens is the next pitch, the batter hits a home run, and you just don't do that. So I don't like to talk about
Mess up the
what's going to
flow.
happen tomorrow until tomorrow is over. But
Yep.
but my goal always is to get called out every week, get back to cash, so over the weekend I don't have to be concerned with what's going on, and then wait for a down market day or a down market moment to enter additional positions the next week, so that I'm getting in a lower place when the market goes back up. I'm in even a better position.
And I mean, the ability to have those management techniques and be in a spot where it's less directly controlled by the movement, right? You have
Yes.
conditional options. Yeah,
If
Joe,
it
really
go up,
quickly.
sideways or down, and I still get called out. And as Micah said, with the cover calls, we have management processes that if it does go down significantly and it drops below my strike levels, then we implement management techniques that actually allows to get out of the position in the next week at a lower place than where we originally started and get all of our capital back with additional profit. So that's what the cover call gives us.
I think there's one thing that he's not emphasizing, and he do it now, is the fantastic leverage you get using this technique. Explain that, Randy.
Yes, yeah, and as Joe said, with the synthetic cover calls, I'm not buying the stock. So,
first of all, before you continue, I would open that up to the whole. I mean, that's kind of how we base the whole all the techniques.
Yeah, well, especially what Tim and Mark and Deshaun do. They're paying $1 or less for their option to be in for 45 seconds. But for the synthetic cover calls that I teach, like Qualcomm, I had 76 cents a share invested, and then got $1 back when it closed. That was 31.5% return for 3 days. For even something like Tesla. Okay, Tesla's trading at all $600 and something. I only had $4 per share invested in Tesla, 24% return for 5 days of investment, less than a week. So it as Joe said, it allows you to leverage your capital without borrowing any money. And margin is the death of a trader. We don't trade on margin, but you can use less capital by using the options as opposed to the stock. And that's what we teach. No matter which one of us, we all do different processes, but that's what we teach, is we teach you how to use options to generate daily or weekly income.
And here's how significant that is, Randy, on Apple. Tim did a deal after I left this morning, so he just texted me a while ago. But for example, he got into Apple for 75 cents, okay, and then sold it a few minutes later, a few seconds later, for 85 cents. That's a 13.33% return.
That's fantastic.
But 75 cents versus how much is that, Tim? 100 and something bucks, or what is it?
How much was? I'm sorry, Joe.
No, I put it into it for 75 cents. And how much is the stock? You bought the leap for 75 cents.
Contract, right? So
Yeah, the contract was 75 cents, and that it's so highly leveraged. I'd have to pay $1.29, almost 1.30. Well, $1.29 right now to buy it if I had to buy the actual stock and do it. So our leverage is incredible. Maybe the highest leverage there is in trading.
It could be higher, and there's no risk of loss or more. There's no risk of having a margin call. It's impossible. I mean, you just So it's
yeah, and when we talk about leverage, it's totally different than like that Archegos leverage, where they took $1 and borrowed $100 against it to invest. Right. They had huge exposure, huge risk, which almost took down the financial system last week.
Yeah,
because they were trading on margin. When we talk about leverage, we're just talking about being able to use a little bit of your money without borrowing anything and not having any more at risk than whatever the amount of money that you are using, and then be able to generate a fantastic income without having to use a huge amount of money on these, quite a lot of stocks are so high cost these days that you can hardly afford to buy 100 shares of the stock, but you can easily buy a contract in an option.
Yeah, I mean, you can start, excuse me, you can start our technique with $500 in a trading account. You don't have to own 30, 40, 50 grand worth of Apple stock to make money on Apple stock. Especially right now with Apple as cheap as it is.
Yeah, let me give my old example. I've done $2,000, Tim. You need to start with 2,000. If you make 6% a week for 2 years, that's one trade, 6% a week. By following you guys make 30, 40, 50% a day. Make 6% a week in 2 years of trading. You're going to have $850,000. You never put anything in. You use $2,000. You just keep leaving the money in and letting it compound. $2,000.
And that's one of the big things with Tim and Mark at Deshaun. They're using the same money over and over and over and over again. So they can trade that same $500.
I think that's the biggest.
And again.
I think that's the biggest
compound
difference.
those returns.
Randy, between margin and leverage, because we talk about those things very often and they're very different from each other and they're very a clear distinction. And I think an easy way to think about it is the existence of the money. And in margin, it kind of does, but it simply doesn't exist. Leverage is saying that you're going to put a bigger stick on the end of the same size rock. The rock is still there, right? You're not saying, oh guys, no, it's actually more than you think is in there, right? It's not this fictitious balance in your account. It's making that small balance more effective. Mm-hmm. So the first is margin, which is fake money. And leverage is you can apply leverage to very small items and make them go very quickly with a lot of force, right? So I think that's kind of that differentiation that we need to make.
Can I say one more thing?
Yeah, please.
Right, Keith said hello to Randy earlier. Let me say one thing about Keith. Keith, like Mark, Randy, to a lesser extent, Tim and Deshaun, but those two guys, and the three guys, have been with us forever. I mean, we're talking 15 years. And Keith, I've never known Keith, anybody that's done what Keith did. He came to us and he actually did what we call a master's class. 4 people that are our class that have done real well over the course of a year. Anyhow, Keith came and said, well, what I've got here, I've made 1,000% in a regular brokerage account, 1,000% by the time we do this broadcast from master's class. Well, he fell short a couple of 5% or something like that. So we only had 955% or something like that, 95%. Actual
useless
at the center showed the actual statements. Okay, the actual statements. And then he's been with us up until recently doing one of our takes. I'm sure he's going to be back. But that's the kind of quality of the people. All 3 of these guys. And Mark's, the same way, and certainly Randy, and Tim will be too. They just hadn't been around quite that long. So
Tim's an up and comer, huh?
He's an up and comer, yeah.
Joe, I had a moment of feeling quite old because I'm now 8 years with you guys.
That's right, 8 years.
Holy smokes.
Think of that.
Yeah. Almost all of his life, you can tell.
Yeah.
Well,
he a madness in my eyes.
He graduated kindergarten early.
Yeah. Exactly. Went straight to the charts. I think, and that's the funny thing is just how we all go about our trading journey is so different. But I think that's very relevant to our topic today, which is charting indicators. What do we use and why? Now, I like how you said this. For anybody that wants to follow along, I'm looking at the Cow Report, which goes out every week. You can sign up for it free on our website. And it gives trade examples, different things like that. And we have an editorial on there every week, which is our upcoming podcast topic, as well as our opinion on certain topics. So again, reminder, feel free to drop any comments in the box or questions, and we can answer those live for you. But I like how you said this, Randy, because it's, first of all, charting indicators, what do I use and why? We're addressing the fact that there's so much out there. First of all, I want to make that very, how many indicators do you think are in existence? I can go through on TradeStation there was a couple hundred that were pre-installed, and then you can download or I mean within an indicator you can change up to 6 settings, up to 5, 6, 10 settings, sometimes individual figures within that indicator. Do you guys have any idea of the quantity?
I think really it's almost infinite, right? Because maybe it's making up new indicators or taking existing indicators, modifying them. So
Right.
it's almost infinite, right? Because you can set them almost any way you want, like change the values.
And the thing about technical indicators is there isn't just one indicator that you can look at. Because if there was just one indicator that told you the whole story, everyone would use that and everyone would have the same profits. But you have to use multiple indicators all kind of weaved together. And that's what you see like on the broker platforms is they have all kinds of combinations out there. And like Mark said, every moment somebody's coming up with a different kind of combination to say, hey, this is the one to do. If you watch these 25 things, this is how you do that. And so there's an infinite number of all those combinations, and it can get overwhelming when you're out there. So with the advanced charting program that has been developed by Joe and the group, it takes, I think there's 20, maybe 21, but it rolls them all into one charting package, and you learn how to read the charting package, and it lets you see what's the beginning of the momentum. And that's what the whole reason for that chart. Where's the beginning of the momentum so that you can enter at the beginning of the birth of that momentum, and then ride it for as long as you desire to ride that. And Mark and Tim and Deshaun, they use a chart that's an intraday streaming chart that it looks at the momentum over minutes, where what I teach on Mondays is a daily advanced chart, and it looks over the longer term, day by day by day, and it looks for the trends and the cycles over a number of days. And without those charts, then what we do would not be, they would be speculating. It would be shooting in the dark. But with those charts, the advanced charts, the intraday streaming charts, it allows us to look with high confidence where's the beginning of that momentum. So when we enter a trade, we have a high confidence that it's going to go in the direction that we expect it to go.
Yep. And I think where you started with it is so key. Like, it has to be that combination of indicators, because I think every indicator, like as you approach it, people kind of think of indicators as silver bullets, like that one indicator that they just got to find in the right time frame. I mean, it doesn't take into account, first of all, that the market is one of the most dynamic things in existence as far as how fast it's changing. I think, we've all seen a pretty dramatic amount of change over whatever amount of experience we each have. Bringing those indicators together. So how do you guys go about starting to narrow that down then for people? I mean, of course we have the advanced charting, and that's our combination, right? But when people want to start kind of getting comfortable with what they're going to trade, how do they even begin? They're going to throw volume on there, and then does anyone have any recommendations?
Well, they're usually broken into a couple different things, though, right? Momentum, moving averages, and volume, like you said, right? Those are probably the three key ones that people look at. And some combination there, right? In various cases, they're either two lines that cross over, like we have some of ours in our indicators, or a single line, perhaps, or just a volume indicator when it's green or red, tells them which direction the market may be moving, right? And like I say, there's no silver bullet out there or golden, idol that's going to be the exact or the best one, right? But some combination thereof, depending on the market conditions, works better than others perhaps at one time or another. Just a matter of finding something that you're comfortable with, I think. Of course, our charting system has been developed over many years and tested. Now we're very excited about using it because it seems to be continually allowing us to enter and exit trades in a profitable situation.
Yeah. But already you simplified it. There seems to be a class of indicators, or multiple classes of indicators. Like crossover indicators are their own thing, right?
Mhm.
I think that's one thing to know as well, as we come in and simplify these, we start to see common themes, and they almost work like road signs a little bit. Not all yellow signs say the same thing, but they mean the same general area, right? And all the red signs are kind of closer to what they mean.
Mhm.
Yeah. So what were those? What were those classes that you said, Mark?
Well,
Momentum,
momentum, right? I can't remember, right? Momentum,
Moving averages, yeah.
moving averages. I'm sorry, and volume.
volume, absolutely. And that's what you guys use in the near term as well.
Yeah, and some combination, I would think, thereof, right?
Yeah, I mean, our the way our charting system is set up, it's just perfect for what we do because it has graphically eliminated a lot of noise for us so that we're able to really just look at it and instantly see is the price rising, is the price falling, how much volatility is going on, how much trading is going on. So within a snapshot, we get a real good idea of what trend is currently happening. Are we rising? Are we falling? And I can't, I'm on TOS and I can't do that as well on my platform as I can with our charting system. I don't have to look at the 20 different things individually, and there's a lot of things that go into our charting that moves our lines. But I don't have to individually look at all those items. I can glance at our charting and instantly know where I am. What's my trade decision going to be? I can instantly tell that. And so indicators I look for, of course, I'm looking at the tick, for me is the most important, followed by Bollinger Bands and then longer term moving averages as we have in our lower indicators. That gives me everything I need. And since we're doing, 15 to 20 second trades, I'm not so much, I'm not concerned about what happened in the last hour. I'm really concerned with what's going on in this 5 minutes. So those
So
are
your
as I look. Yeah.
your charting and your indicators is pretty heavily determined by your time frame.
Yes, absolutely. We're using 1 minute charting. We show 1 minute charting or the 1 minute scale on our charts, which I believe gives us, the best view of the information we need to make a trade decision on here. And something else that's really unique, and I'm not here to sell our charting system. I think it sells itself. It doesn't need my help. In selling it is our Bollinger Bands are non-traditional in the way that our tick can move outside of the Bollinger Bands. Gives us a very quick visual indicator of how much energy is behind that move, which is really, really handy in what we do. I don't have to draw lines on my chart. I just look at it. But anyway, I've really, I think for my trading style, it has just gotten down to a real simple, where's the tick, where are the E lines, and is there enough volatility, price volatility that's happening to be able to successfully enter a trade?
Absolutely. Yeah. A little bit of clarification for anybody that the time frame is the core function of the indicator is, to simplify it in your head, it really is just to plot a line, right? So the time frame is whatever portion you're in. So each minute or each 5 minute period or each 10-minute period, it takes that number, the number of the volume, the number of the RSI, the number of anything you may be looking at, and puts it as a point, just like you'd see the price of a stock go up and down on a jagged line. That's because each time that number is different and it plots that point a little bit higher. So the time frame includes everything within that 1 minute, 5 minute, 15-minute period.
When you subscribe to that micro moment trading, which is the morning session, Tim and Deshaun and Mark, that chart comes with that chart
Yes.
basis that comes with that. But now when you leave that service because you no longer really need that help, then you can rent that chart separately. And I think that's something like $12,000 a day or something like that. I'm not really sure.
Yeah.
No, it's not.
It's about the value. Absolutely. So, Randy, what is a clear difference? I mean, watching, I'm sure we have people that trade in the near term and long term. You have a good scope of different time frames as well, because you can, you do the micro moment stuff, you do some 3-hour trades like today, and then you do have some that can last a week. So are there any primary indicator differences that you use?
Sure.
Yeah.
Sure. And as you said, what Mark and Tim and Deshaun teach, the micro moment trading, I also do that. My 3 trades today, actually I just did another one while they were talking. It
Nice.
was over 7% return this morning. I'll probably stop doing that for the rest of the day because I don't like to push my luck. But I do that, and that's the intraday streaming chart. You have to have the intraday streaming chart to be able to do that. So that's said, I don't know, there's 10 or 12 indicators on there. I haven't really counted them, but then what I do on Mondays with the momentum trading, that's a daily advanced chart. It takes the 20 indicators. It has the things like Mark mentioned. It's got 5 different moving averages on there. It's got the Bollinger Bands. It's got candlesticks. It has the momentum indicators. It has the volume indicators. And we teach all of that, of how to read all that's on one chart, and you identify specific points on there. And we have a whole system of what you look at first, second, third, fourth, fifth. And when they all are in alignment, that's the entry point. And so those trades, because they're longer term trades, they're for a day or 2 or 3, we're looking at the trends and the cycles over a longer term, as opposed to over the next 3 or 4 minutes. But it gives a great indication of the beginning of strong momentum in one direction or the other. And we use that not only for that momentum trading that I teach on Mondays, but also for the covered call entry and the covered call management techniques as well, that it enhances that decision process to be able to look at what's the high probability of the direction this equity is going in the next couple of days. Do I want to enter a covered call that's going to last 3 or 4 or 5 days, or even up to a month? And so, but the covered calls that I do is I want to be in 5 days or less. I don't do longer term for a month or 2 or 3 months much anymore. It's all enter this week, exit for this week to generate a great return. And that's the chart that I'm able to look at. That momentum, is this stock likely to continue going up for the next few days when I enter a covered call? So that's what I use. And then I also combine that with a simple line chart to get support and resistance levels as well. And I use those a lot in determining how low do I want to go.
Absolutely.
So, to Randy's point, just imagine. I'm sorry.
No, you're good. For those just watching,
to Randy's point, if you didn't have any indicators and you're going to buy a stock, it's like driving a car blind, right? How do you know when to buy it? How do you know when to sell it? Or you hear somebody on the treadmill next to you, hey, man, I just bought some GameStop. Hey, yeah, I think I'll buy some today.
Yeah.
So how do you know, right? These indicators give you kind of a roadmap, or at least a view of where this potentially is going to go, and some idea of when to get in.
At least instead of just having a car with a gas pedal, you have a car with a gas pedal and a steering wheel. maybe
And a brake.
mirrors, and a brake,
and,
right?
and a windshield,
Yeah,
Yes.
so
all
you can see
different
where you're
kinds.
going.
That way you don't get those bugs in your teeth, you know.
Yeah. So we start to see a kind of symbiotic relationship forming with these indicators. That's interesting.
Yeah, and then you think of GameStop, which was basically bought up on rumors and someone writing something online. That's about akin to the guy on the treadmill next to you saying, "Hey, I just bought GameStop. You should buy it."
Yeah.
We had a whole massive explosion happen on that very same thing, right? And we had the last count I heard, there was 92 billion that was lost because of that.
So what's the flip side of the coin? Because say this hasn't happened yet. You're looking at GameStop and going about a normal day of trading. I'm not saying the average trader would trade GameStop every day, but you're moseying along, doing your thing, and then something just happens. The indicators don't tell you. There's no, and it launches the other way.
Mm-hmm.
Wouldn't that be a rank against indicators saying, well, anything can happen at any time and they're useless because you never know what the market's going to do?
Well, anything can
Anybody.
happen. Right? Geopolitical events, national disasters. Who knows, right? Something could happen. News comes out. Company has accounting irregularities, which is one of the worst ones, right? And then the stock just tanks, right? So fortunately, usually in our techniques, or most of our techniques, I believe, Randy and Joe probably speak to, but we have some type of management technique in place too to help us out. So indicators in and of themselves aren't the holy grail, but they help us understand where the stock is going to go. And fortunately, a lot of people are also following those indicators. So it's kind of a self-fulfilling prophecy, right? So, here's a top, double top, here's a bottom, double bottom.
Randy has a book. It's got 300 pages in it. Multiple things you do, never lose money and to always make money, whether his positions go up or down. In the micro moment, the one that's only 15, 20-second trades in the morning, every morning, there's only one rule. And you got your little green, red button, and a red button and a green button. If the button turns red, you just get out. You're only dealing in cents. You get up maybe for a 2 cent, 1 cent loss. If you don't get out, you may, if you hang in there thinking, it's going to change, it's going to change, it's going to change, and you may have a 20 cent loss, 25 cent loss. You just get out because you may go back into it, 30 seconds later, back in the exact same trade and get out for a profit. And you're just in and out. You don't wait. You never, ever wait. And Randy's is a different deal. It's a totally different concept. So,
yeah.
Yeah, kind of following up on what Mark just said is that, because of that self-fulfilling prophecy, the markets or a stock or an ETF tends to follow patterns that repeat over and over again. And we can see those. Yes, we do have unexpected pops in the market. It happens all the time. And we get there's no indicator that can predict a pop like that. They happen. For us, we try to take advantage of them because of our speed. We can get in and out of stuff pretty fast. But we have one simple rule in the morning, and Joe just said that is when that indicator, when the tick turns, we get out. But we're all in an equal playing field. We're all using generally the same indicators, different packages of them, but the same sort of indicators to figure out our entry and entry points. So to that extent, the indicators make an equal playing field for us to be able to play on.
Well, it's not exactly equal. For instance, just on you guys, Mark does QQQ, Randy does everything. It's just a technique. Deshaun's SPY and Tim's Apple. These stocks don't go out of business. They're there every day. Those are the only ones that do. They get to know them just like you would a little kid or something. But you tell me anybody that's made 158.1571% through this morning in the market. Give me a break.
Yeah, that's not equal.
You can take GameStop and you try to make it on GameStop even its best situation, and you only do this for an hour. But this is not an all-day thing. This is an hour.
Yeah.
You know, but
Well, I think-
it is now. You know, which is
Well, that is the power. That is the power of our charting system. Is that it does give us the earliest indications of momentum, and then frankly, that is an unfair advantage.
Yeah.
Yeah, I was speaking with Deshaun a couple weeks ago about that kind of concept and how we just the mindset that goes along with that, because we've all acknowledged that you can't just not every trade is going to go in your direction. You can't
Mm-hmm.
you can't understand those immediate pops, and you're not going to be able to tell the future and know those are coming. So you can either resist that thought and hope for dear life that you don't get caught in something, or you can have your entire operation be in a way that accounts for those things.
Mm-hmm.
Deshaun, could you explain that better? How the kind of concept we were building with that? Oh, is he still with us?
Well, yeah.
Okay.
Tough for me to pinpoint exactly the conversation you're talking
Oh
about.
yeah, just on relating it to indicators, I guess, would be how we kind of go about things when we know that there's guaranteed unexpected situations. Like if you're going to trade, how do you kind of keep that in? How do you keep that mindset? Where do you keep that if you know some of them are going to be losses? And the indicators are good, but only if nothing too unexpected happens. Like if you know there's that stuff already, how do you keep that balanced in your head? And how do you actually execute getting out for a loss in the right way when it does have to happen?
Well, yeah, I guess the idea is going to be different for different people. For me, it kind of starts with I had to have a risk management plan at the beginning
Mm-hmm.
because our charts it's just patterns, the same patterns over and over and over again. So nothing's 100%, and just going in knowing that idea would make you respect your risk management plan. So, for instance, Joe's is like if it's red, get out. That's his risk management plan. So
Yeah,
it's just honestly, it's just about knowing that you don't know everything.
absolutely. In the micro, so in the macro, you can average up. Yeah.
Mm-hmm.
Yeah, no, I completely agree. It's like staying alive and protecting your account, Joe. That's what you talk about.
Mhm.
Protecting that account, because if you have, well, I mean, first of all, none of it's guaranteed, right? So we're in the realm of odds, and that's something that people try to avoid in the market, but you just have to address it at some point.
Well,
This is
in micro moment, we're not trading that speculative appreciation or decrease in the value of a stock. We're not anticipating that. We're just anticipating movement.
Yep.
We need a little less than that,
Right.
but micro is just the movement. So
Yeah.
whether the market's going down or up, and we can instantly switch like that in an abrupt change. And because we only trade movement, we don't trade appreciable value or anything, or depreciable value. So
it's a non-resistant technique. You realize the market's changing all the time. You realize it can just turn and go in a different direction. So you built the technique around
exactly, yeah.
that.
Yeah, see, and that's not it's nothing that's based on you hear somebody say on TV, this is going to have a go up, it's going to go triple in the next year. We don't listen to all that stuff. It's not dependent on us thinking that it's going to go in a certain direction. As Joe said, we're just analyzing what is it doing right now, what's it likely to do in the next couple of minutes, and that's what we act upon. Not, well, we think they're going to have better earnings in a week from now, therefore it's going to go up, or they're losing their. We don't go through all that stuff, and that a lot of that's called fundamental trading, where people study all kinds of stuff about a company to decide is it going to go up or is it going to go down. We're just simply looking at what is the current activity that's going on with the chart. Is it the right time to get in, and which direction is it going to likely to go? And it's all about probabilities, increasing, putting the probabilities on our side.
The nice flexibility of both Randy's and the micro moment stuff even if you like to buy stocks to hold and live off the dividends, you can substantially increase your dividends using either one of these techniques. Astronomically increase. If you're getting 3% a year, 4% a year, which would be a big dividend yield, you're going to get 12, 13, 20% a year. Just adapting either one of Randy's or Tim and Mark's stuff and Deshaun's stuff in there. So you got total absolute flexibility. It's just incredible what you can do. So
yeah, and thing with Micro Moment is we're very agile, right? We can get in and out very quickly. That's a real advantage of what we do with our charts.
Yeah. But it's all about rhythm. It's all about rhythm. Micah has rhythm. He's a great singer. Deshaun has rhythm. He dance and sing at the same time. I don't know about Mark, but look at all those guitars he has behind there, pianos and stuff. I'm not sure what
I forgot about that. Oh, whoops.
Martial arts that is.
Martial arts stuff or something.
Yeah, there you go.
Tim's got all those. What are they called? EGOs? What are they called?
EDM.
He's got all the EDM, so he's got all kinds of rhythm he's going on out
That's
here.
right.
Making up,
it's all machine generated, but it's there.
Yeah.
And Randy dances around on the baseball court. So
baseball field, yeah.
If anybody would like to drop in any questions for us, I'd like to open up the Q&A. This can be related to the topic or not.
Marion good comment. I read her comment.
Yeah, great one from Marion here. Those just watching for the first time or even first couple of times, these trading techniques are fire, she says. And these gentlemen are unparalleled in their mastery of the techniques. I would say Marion is unparalleled in the encouragement and hype that she gives us. She's always there, being a great encouragement. She's on the webinars.
She's been a client for years, literally years, and she's attended seminars all over the country. That we have. She'll just show up.
Yeah, so, even left the country, I believe, right?
Yeah. She's good. Spends a lot of time in Vegas, which kind of concerns me, but
Yeah, that's awesome.
And have some fun,
Fantastic.
Oh, and she has a terrible sneeze. She has a sneeze that has literally emptied our very first room where we were having our Micro Moment, very first Micro Moment seminar. You there? You saw it. I know it hit you against the wall, Micah.
Pre-COVID time.
The door flew open. People flying out the door.
That's fantastic. I do want to mention our next event soon, coming up on April 10th. So it's in 2 days. Intro to Options workshop. Basically, it's the super intro stuff. What a bid and ask is, all those different confusing words, how time value works a little bit. We're going to break down those basics and hopefully make it a little bit clearer for everyone. So at micromomenttrading.com, you can find that event. We did run the sale already, so sorry you missed it, but follow us on Facebook and LinkedIn for the sales. Those come quite a bit through there. I put them on Instagram as well, so take a look through that. We have those coming up. And then week after next, Randy, Trading for Momentum.
Yes.
It's the 17th, I believe, right? April 17th and 18th, yeah.
Yep.
A Charting for Momentum workshop. Perfect. And you briefly talked about Charting for Momentum. Given our topic, what will you be covering in the Charting for Momentum?
I'll be covering how to read all the indicators on the proprietary advanced charting, and then how to roll them into one to make your decisions, and then how to use those for various types of techniques.
Perfect. So he's going to teach you how to use the mirrors, use the brakes, use the steering wheel.
When to apply the gas.
Yep.
And which road you should be on.
Yeah, which road, yep.
Yeah, which side of the road, maybe?
Yeah, what direction? Yeah, so you're on the right side of the road and going in the right direction.
Well, I look forward to that. It's totally has been theorized that we might have one more sale come across social media. I don't know, just rumors I've heard, neither confirm nor deny.
He's starting a rumor.
Yeah, absolutely.
And we're working up on another session, live, everybody here. We kind of get put together with all the rules, regulations, and stuff about flying and all that kind of stuff. So,
About a live event?
Looking forward to that.
yep.
Oh, thanks.
Oh, I haven't even heard these rumors. There are really rumors spinning around.
Yeah.
But I want to thank everyone for being here. Thank you so much. And we have a couple more comments. Let me check what we have. Oh, Marianne's saying don't talk about the sneeze.
Come on.
Daryl, Tim, what is your procedure for exiting quickly if things go south?
Yeah, a couple of things that you can do, and this is great. That's the right question you should be asking. If it's a fast-moving market, there's really two things you can do. You can try to get ahead of that price by a couple of cents and get out, or you can go with the nuclear option, doing a market order and get out. Frankly, if it's really fast-moving, it's probably the most efficient to use a market order and just get out of that before it gets too bad.
But if it's not, what's the original as well?
If you can try to get ahead of that price by a penny or two and let it meet you, that's the best way. Often when the tick is moving so fast, the price is moving so fast, by the time you hit the enter button on a limit order, it's already passed you by. So unfortunately, you have to lead it a little bit to get out, or the market order, which will put you out at market, but at least you're out. That's unfortunately, that's pretty much it.
Let me say one thing. Let me say just one thing on that, because I know he's got to sign off here. Yesterday, when there was 18 transactions, there was 3 losses, and they were a percentage of 1%. A percentage of 1%. They got out of them. Sean won and Mark won. They got out of them so quick that it just doesn't mean anything. So,
A fraction of a percent for the losses.
yeah, like less
And
than
what
1%. Yeah.
What were some of the gains?
You got to quickly minimize losses.
The gains were 4%, 6%. Deshaun had one the other day, 40% in one transaction, 7%. Yesterday, Apple, Tim had a 13.33% return. Yeah, just yesterday. Yeah.
So in summary,
There you go.
you're guaranteed to lose some of the time. And if you arrange charting indicators to keep you safe, and it's a game of odds, you can accept those losses very easily while continuing to grow your account. I think that's where we landed.
Yeah, that's a good summary.
Fantastic. Yep, it's absolutely true. Well, we could talk about indicators for hours and hours, which we do every day on our coaching services. So go check that out on our website. And I appreciate everyone for being here. Any last comments, guys?
Nope. See you later.
All good. Thank you, everyone, for being here.
Have a great rest of the day.
Yep. Have a good day and have a great weekend.
Yes. Happy weekend. All right. See you guys.